I'll introduce myself first. We're Coinscrum. I'm the co-organizer of Coinscrum. We were the first Bitcoin meetup to start in London back in 2012, so we've been around for a while. We've seen the space evolve somewhat since then. We're privileged to be asked along to host these presentations today. And we're specifically going to be focusing on crypto assets and the history of their trading and where we are now and where we're going next. Both in terms of what's already had traction, which is tokens and cryptocurrencies such as Bitcoin and Ether, etc. Also now as we're moving on into tokenized assets of other kinds as well. And that will be what we discuss in more detail in our second panel. Myself, I'm a derivatives trader by background, so I kind of have had a good view on this as it's evolved. My own startup has been looking at building professional institutional type infrastructure for accessing these markets. But we're also very welcome or privileged to welcome along five guys that are working at different companies that have been over the years, from the earliest days to more recent times, involved in this space, coming from backgrounds that give them good insight into what needs to happen. So I'll introduce them. I'll let them speak, introduce themselves. We'll start with Obi, he doesn't have a picture because he was a late addition, but I think an important one because Obi is CEO of CoinFloor, which was one of the first the first UK cryptocurrency exchange, formed back in 2013, 2014. So he's been through these crazy cycles at ever-increasing scales, so he's probably got a lot to tell you and teach us. But I'll let the other guys introduce themselves. We'll welcome Andrew from Coinbase. We have Sebastian Higgs from Vault, who's one of the leading custodians in the space. Chris Hermida from Circle, who you probably all know. And Will Dulude from Tagomi, that's a much more recent entrant to the market. But they're looking to very much address this institutional access to these markets. So I'll let you guys just introduce yourself a little bit briefly, and then we'll move on.
So thank you, Paul. You did most of my work for me.
Exactly. There you go.
So my name is Obi Nwosu. I am the CEO and one of the co-founders of CoinFloor. As Paul said, we are the longest established cryptocurrency exchange in the UK. And we've we've seen the space over the last nearly 6 years go through a lot of transition. So initially it was heavily retail, and then we saw a process over time where interest came in from ever larger institutions, small to medium-sized institutions, high net worths, and then I would say last year there was this very strong push towards getting large institutions in the space. During the bearish period, we've seen a retracement and revert back to a focus on retail as well. But it's going to be an interesting journey over the next few years, and I think a lot of us will be able to have some interesting input into that.
My name is Andrew Robinson. I lead the institutional business in Europe for Coinbase. So for us, that's our exchange, so Coinbase Pro, our OTC business, as well as our qualified custodian business as well, Coinbase Custody. So look after the functional lines of sales, trading, and client services for that business. Joined the company, I guess, 14 months ago, what seems like a lifetime ago in crypto years. Prior to that, I spent 10 years in traditional finance, similar to Paul, trading fixed income swaps, as well as equities, cash equity sales and trading.
So my name is Sebastian Higgs. I'm the director of business at Vault Digital Asset Custodian. So we were founded in 2015. We've been providing cold storage solutions to our institutional clients for about 2 years now. And the backgrounds are a bit of a mixture. So myself coming from banking, worked at Goldman Sachs in London for several years, across products in many of the markets. We also have a number of guys on the team who are from a physical and cyber security background for the UK government. So protecting assets, building infrastructure and breaking into architecture is very much their forte and very applicable to protecting something like the private key. So that's what we've been doing for the last few years.
I'm Chris Hermida. I'm an OTC trader with Circle. We're one of the oldest companies in the space, primarily US focused, but with a big presence here in Europe. And been with the company for about 4 years now, and it's been cool to see it grow from the humble days.
Hi, I'm Will Dulude. I'm from Tagomi. We launched in December. We're an institutional brokerage for digital assets. And my background is also from traditional finance, so I was previously at Tower Research Capital, and before that, KCG.
Cool. Thank you, guys. Okay, so I guess as we've kind of given that kind of brief history and a flow, I think it works nicely across the panel here. Again, I don't know how many of you kind of have traditional market knowledge, but I think one of the most curious things about this space, I mean, obviously, especially in the last 2 years, it's become a very significant asset class, if we believe all the volumes being reported on these exchanges. But compared to 3, 4, 5 years ago, it's grown significantly either way. But compared to other markets, every other market in the world has probably grown out of a wholesale model, a B2B type model, and over many years, we've had from that regulators and specific regulations and legislation come in to manage those markets, to prevent abuse, and to have an infrastructure which is trusted. Now, this has grown out of retail, very much a retail space. The way exchanges or trading venues in this space have evolved as very much distinct individual silos, and that's worked well for them. But now the question is, how do we bring institutions into this space? Because when they look over the fence, and I think last year there was a lot of excitement, they saw the hype, they saw the price rises, and they thought, okay, finally this is big enough, we want a piece of this pie. And I think they literally all looked over the fence thinking they could just step in like they do with other markets, and then they thought, whoa, hold on a minute, we can't. The infrastructure's not there for us. This isn't how it works in our world. It's not a world we understand. But we think that's changing. The first steps, I guess, for companies such as Coinbase, who really were at the forefront, as well as Obi and Coinfloor, the forefront of developing this retail space. You've both been looking at how you now take what you've learned, what you've built, and open up that market to institutions and offering products. Andrew, I know that Coinbase made an announcement a good year ago about how they were looking to service that market. What's your experience there? What's the reality on the ground from what everyone reads in the news and what you're actually hearing from clients and customers?
Yeah, I think separating fact from fiction is that there's a lot of media press and talk about the institutional wave of capital that's coming into the space. And I think that it's on its way. I don't think that 2019 is the year. 2020 also may not be the year. But I think that it's important to take a step back and define institution, right? Because if you're talking about traditional financial institutions or asset managers and pension funds, that might still be kind of 3+ years down the road until we see those players come into the space in a meaningful way. But however, at Coinbase, the way that we define institution is a lot of the people that are up here today, right? So people that have immediate needs for crypto. Same as a lot of the people that will be exhibiting in this hall today. So we're all institutions or corporations, just of a variant type. So we kind of speak of it internally as the crypto first institution. So that's a lot of the large crypto asset managers that have launched in the US and Europe and Asia. That's your miners, that's your asset issuers or projects that have come into the space. That's people that are doing payment services. So I think that the fact is that those types of institutions are there today and they're growing. We're seeing a lot of people that were money managers in the traditional world start to leave their old funds and go start up actual crypto hedge funds, not these kind of crypto VC funds that are long only and go up and down with the market, but people that are running proper risk management and different types of market neutral strategy. So that space is really starting to mature. The AUM is a lot smaller than what we would have been used to, at Tower Research or, my days at Lehman or HSBC, but still growing and really important.
Cool. I mean, Chris, just ask you, because when Circle set up, unlike, I guess, Coinbase and Obi with Coinfloor, your business grew out of setting up OTC trading, which was the first step to enabling access to this asset class for people that were very cautious about directly engaging with these retail exchanges. Now, what's your experience been, and what are your clients asking for? And I agree, what Andrew said. The term institution is a very broad spectrum. And if we think back 3 or 4 years ago, there were some very dedicated crypto-only funds. But if we move beyond that to the types of family office, if we include those, and then actual traditional hedge funds, which might have a mandate to access this asset class where maybe a pension fund doesn't at the moment, what's your experience been there?
Yeah, so just to clarify that, our OTC business actually grew out of our retail business. And what I mean by that is our retail app had limits of, I believe it was $3,000 at the time, worth of Bitcoin that people could buy. And we would have individuals, family offices, et cetera, that somebody would use it and say, hey, this is really interesting. I really believe in Bitcoin. How can we buy more? And we would sort of do one-off OTC trades as a way to meet that demand. And so that business grew organically out of that with the market and with more interest. Now, in terms of crypto institutions, it's to Drew's point, I think we're still a while away from seeing asset managers and sort of pension funds and what we consider traditional financial institutions get involved significantly in the space. But hedge funds, VC funds, and dedicated crypto funds that all have the risk appetite can and have been active in the space.
Okay. So the other critical, and it's again become a common theme over the last year, or subject, again, and I think the positive side of at least there was an indication of interest from institutions during the frenzy of the last 2 years. What that has done, the positive outcome of that is that it's attracted new investment into space, it's attracted a lot more new startups, knowing there's a problem that needs addressing, which is positive. So there's a lot more mindshare kind of looking to address these problems now. Sebastian, you're like, Vault was an early mover in the space in terms of looking at independent custody. One of the problems, as we look at the retail exchanges for institutions, is they act as exchange, they act as custodian, they act as broker, everything rolled into one. These are all distinct functions in traditional markets. So one of the main things is around custody being potentially distinct from the execution venue. So again, what's your story? How have you seen that evolve from your early days? What's the demand you're seeing? And what other things are you looking to launch and issue around that?
Yes, I mean, you're quite right with, a lot of projects out there try to be all things to everyone. We've seen that a lot with the early exchanges that have been around, not just providing the execution services, but also the management of client assets. And, there's a whole bunch of data around exchange hacks and all kinds of different problems and issues resulting in billions of dollars being stolen or lost through mismanagement. So yeah, our focus is very much on the custody side in the early days, and we went down this route, and it's complex from the perspective of it's not just building one solution for all the currencies out there. It's very different protocol on Bitcoin versus Ethereum versus what might be coming down the pipe in 5 years from now. So the way we went about it was building something very flexible and scalable. So the common denominator being the private key, and that's where we build our infrastructure. And again, we'll take management of key generation, key management, which is ultimately how you're going to protect your cryptocurrency holdings in this space. So yeah, that's been our focus, and we're seeing more and more that we need to acknowledge the new participants coming in who see that custody and security is essential, but also they don't want it to mean a drag on the balance sheet. So starting to offer new services as well, whereby just because your funds are in cold storage doesn't mean that they're completely off the grid to you. So we're starting to offer yield services, and we'll later start offering things like cold storage trading out to the market as well. So things to come.
Yeah, I think I talked about this late last year, but what we are seeing from our larger customers and what we're expecting to see in this market is a repeat of what happened in the traditional markets. So we're going to see this great unbundling where different organizations are going to start to specialize. Above a certain size and complexity of an industry, it's very hard for one organization to do everything well. You end up becoming a jack of all trades, a master of none. So we're already seeing on ourselves, and we're seeing people who are providing custody, for example, at a sufficient quality where we all feel comfortable offloading that risk to them, and we think our customers will feel comfortable having them as providing custody as opposed to ourselves. When we started, we had to do everything. So as an exchange, it wasn't just the traditional meaning of exchange, but you're also a broker, you're also a custodian, you're effectively a low-risk clearinghouse as well. And we're going to see all of those things appear. You're going to see crypto clearinghouses, and there will be people from the traditional space as well as crypto versions of all of these things coming about. The other thing you're going to see as well is specialization in another dimension orthogonally to that, in whereby exchanges are right now exchanges for being the bridge between fiat and crypto. There are also exchanges which effectively act like crypto equivalents of stock exchanges, allowing you to buy a huge range of different lower cap currencies and altcoins. And then finally, there are exchanges that allow you to deal with more complex derivative type products, almost like futures exchanges in the traditional space. You're going to, some people try to service all, I think you're going to start to see specializations in that direction as well.
Okay, so Will, just to finish off on this particular subject. So Tagomi, you formed your team about a year and a half ago, I believe. Your founding team came from a very traditional financial markets background and electronic trading systems. So I guess uniquely, you're coming into this building, taking the approach where you're building for the institutions from scratch. So what difference, I mean, there's lessons you can learn from what you've seen from these guys and the bullets or the arrows they've taken in the back. But then I guess you also know what your target audience is looking for. So can you explain a bit more about what you're doing and how you're trying to solve these problems?
Yeah. First off, thanks, guys. No, I think we definitely saw a need here, particularly for an agency brokerage where you have a lot of regulation that's either already come into the space or is going to be coming into the space soon. And a lot of the crypto funds particularly have grown over, the last year or two, especially with the boom in 2017. And so now you have, like in the US, we have that $150 million mark for IRA and things like that. And so they want to see their transparency. They want to know where their fills are going, things like that. And we provide specific tooling. For instance, post-trade report or TCA or something like that provides best execution. In the US and here, funds need that ability to prove and have that analysis for the best execution. We provide that right out of the gate. And I think that what that does is that it frees up the funds that are scared to get in because they don't know how to necessarily provide those type of things. We provide that. We also have, we white label, we have strategic partnerships with some of our friends and white label their products so that way people who are uncomfortable with custody, say for instance, don't understand what a wallet is, can trade Bitcoin on a platform that they understand from traditional finance and can one click get that right into cold storage until they're ready to rebalance again. So there are all these hurdles that we need to be able to help as an industry get institutions into crypto in general and digital assets and even security tokens when we go further there because we don't know where that's going.
Sure. So I mean, one of the strange things, I guess, when Bitcoin came around, to anyone that was that was kind of dived down that rabbit hole, the general meme was everyone in the world can be their own bank. We don't need banks, we don't need custodians, we don't need to outsource it. We can own and control our own wealth. And I think everyone kind of believed that until the numbers started getting big. And then even anyone that was an early investor in cryptocurrencies, probably themselves, even though they believed that from a philosophical sense, got quite uncomfortable looking after their own significant value. Although in theory it's a good idea, we're now seeing all these ideas which do very much mirror the old world. It does feel in some senses we're just kind of replicating the old world in certain senses, although I think we all believe as well eventually the technology itself can bring about improvements. But it does mean that we're back to trusting people. And everyone is probably aware of following the news. You've got larger existing organizations from traditional markets, names like Fidelity, ICE, who are launching the backed exchange, Northern Trust talking about doing custody. They don't necessarily have better technology than any of you guys have been working on, that you've developed. They have a reputation, they have a balance sheet. They probably could, I won't say this publicly, they might have worse technology. We don't know. But it comes very much down to trust. And then we look at the regulations. People ask, like, can we be regulated? Should we be regulated? Does it need to be dedicated regulation? So throwing that all in the mix, just each of you, what do you think, is existing regulation sufficient and it just needs to be structured in the right way? Does there need to be dedicated regulation, or should it be light touch as some of the regulators are kind of still leaving it? Drew, maybe if you have some thoughts on that?
I think that we definitely encourage regulation. Regulation is needed to root out the bad actors in the space, and it's also needed to kind of continue to make sure that the innovation and the development of the ecosystem goes in the right direction, right? There needs to be kind of some fundamental protection in place. I think that in terms of, can you just take the existing regulation from traditional finance or finance 1.0 and overlay it to crypto assets? No. There needs to be some evolution within that regulation that's existing, and also some new thought around, what's appropriate for, the asset management space, the trading space that exists from a crypto standpoint. So I think that there's still a lot of thought to go into that, and I think that that's going to be one of the major catalysts that's actually going to unlock a lot of that institutional capital that we keep saying is on the sidelines for coming in. If you're a pension fund, you have a fiduciary responsibility to make sure that you're matching your assets and liabilities, right? So to jump into a new asset class where there isn't really structured thought around, what happens if a custodian loses your money? Like if one of us up here lost, client assets, like what do? What's recourse? There's kind of no precedent that's been set. So without that, I think that, that's, without the regulation, I think that that's something that continues to hamper the entire space.
Mm-hmm. So in the UK, so Coinflow has been heavily involved with conversations with regulators over the years, because it has there was a strong feeling that it was hampering the space, but it was important to put in place, and we still think it's important to put in place appropriate regulation. Too strong and it will affect innovation, and it will prevent people who could potentially benefit from this technology actually benefiting. But too weak, and the players who can bring stability to the market won't enter the market, as you said. At this point in time, it looks like the current sort of advised regulation that is currently doing the rounds amongst all of the people here for responses by the middle of June is suggesting that when it comes to cryptocurrencies, broadly speaking, there are 3 types of cryptocurrency that are being identified. There are what are called exchange tokens, confusingly, but they're effectively things like Bitcoin and Ethereum, the more traditional cryptocurrencies. There are also utility tokens, which are effectively, an example of these would be stable tokens, stable coins. And then finally, there'll be security tokens, which are effectively, if I was going to simply describe them, would be securities with some sort of token decentralized element added to them. And the regulation for all of these would be very different. For securities, they look like a duck, walk like a duck. They're going to likely be the current advice is to be regulated, like the proverbial security duck. But interestingly, for exchange tokens and for utility tokens, they will be regulated for AML, anti-money laundering and countering terrorist financing. But the current view is that regulation, they may still be outside the perimeter of regulation, which is a way of saying that the current suggestion, still waiting feedback, is that they won't be regulated for markets regulation. That's going to be interesting to see what effect that will have in large institutions entering this market for those. In terms of what is needed for this to get to the next level, regulation is part of it, but other things are needed as well. In terms of custody, we have a technology that allows us to have choice. Everybody is not going to hold their own crypto, but we now have the ability to do that. And for people who are technically capable of doing that and are comfortable doing that, you now have that choice. And that choice needs to still be upheld and allowed to continue. And there's a lot of people working on technologies for that purpose. But for people who don't feel comfortable with that, they will want to have it custodied, and they may use solutions like Vault. They will want things like transparency. So we, for example, are the only exchange to have an unbroken record of monthly cryptographic audits where we prove we attest to our solvency, because you can't audit it, but we can attest to it as best as we can on a monthly basis since launch. And other things that we think will be coming out is some form of strong insurance as well. If you are having some other party custody your crypto, you would want some sort of insurance policy to back that as well.
Yeah, so we talk about quite a few things there. I'll just give a few short comments on as many of those as I can. So I think on the regulation, all I want to really say is it tends to be a lot of different regions moving at different speeds and with different opinions as well, which is something we should be mindful of right now. For example, Switzerland is very advanced, I'd say, but the vocabulary of exchange token is not something you'll see in their documentation, just because of how they've gone about things themselves. And we're going to need to start syncing up across regions and reconciling different approaches of UK, US, kind of retrofitting into existing regulations. And then you've got the likes of Malta and Gibraltar coming out with new frameworks entirely as well. We need to kind of cater for business in different jurisdictions. On the point of being your own bank and self-custody, of course, again, as well pointed out by Obi, it's down to sort of risk appetite and your expertise and maybe self-competency to a degree as well. I mean, you can go out and create your own private key, public key pairing, but again, you need to be mindful of a number of things. You know, if you're using your birth date or a simple password as a route to generate your private key, that's pretty hackable. If you're using a random number generator that's not truly random and has some predictability, you're going to probably get hacked as well. If you're truncating your key, you're probably going to get hacked. There's just a number of things to be mindful of. Doesn't mean it can't be done, but again, it's sometimes easier to outsource to the experts, particularly if you have a very high position. And that's, yeah.
I mean, I'll move on in a second, Chris, but just on to that point. I mean, my sense of just having seen this all evolve is that for all the excitement and the genuine interest and the explosion of, in terms of numbers of people and globally that are now glued to this space and the issues that we need to solve as well. The technology itself still has much promise to deliver. When we talk about custody, digital assets are very unique as bearer instruments where custody can be shared across different entities, which is a shameless plug, is something how we've been looking at things. And so that's a possibility going forward. There's also been a lot of talk about decentralized exchanges. The idea being that when we use the term smart contracts as well, that a lot of these traditional services and responsibilities of clearinghouses, custodians, can be programmed into a network. It opens up different risks potentially, and we've seen some very interesting experimentation with that already. Again, probably good at a retail level for now. Maybe down the line these things will evolve eventually where they'll actually address problems in the real market or existing markets. What's your, Chris, I mean, you have a good visibility of this. What's your take on decentralized exchanges? Where are we at? What's the reality of it?
Yeah, so if you ignore the technology sort of component to it, I don't think we're quite there on a scalability perspective yet. Think about where decentralized exchanges make the most sense. Centralized exchanges are better, faster products for rapid trading, and particularly from the custody perspective, from the institutional perspective of meeting current regulatory requirements that don't necessarily fit into this framework. There isn't a big value add there. Now, I do think there's a ton of value for decentralized exchanges from disintermediating custody and sort of having that and having this global liquidity that anybody can access. But again, right this second, it's sort of where does that make the most sense? And it makes the most sense for sort of the long tail of crypto rather than sort of Bitcoin, Ethereum, and sort of the bigger, already more liquid cryptocurrencies.
And so for a firm like yours, Will, I mean, in many senses, you're trying to give the tools to the traditional market participants. But as a company, in terms of your roadmap, do you need to be thinking that one step ahead all the time? Are you going to be a firm that innovates and kind of, leads someone across the bridge into this crazy new world? Or is it a case of what is being built now is going to be sufficient for some time?
Yeah, I mean, half of our job right now is education, right? It's getting out there to the institutions and trying to get them to understand what cryptocurrency is, what the risks are, and what the risks aren't are. Right now, decentralized exchanges are a perfect example of something that's a little terrifying to the institutions that are thinking about dipping their toe, because from an AML perspective and things like that, there's a lot of worry. To be honest, we see exchanges that people are like, I don't want to route there, just because they're concerned about AML and things like that. And those are the type of things that, for us, as we're institutional focused, we need to be aware of, because we need to provide a platform that institutions are comfortable interacting with.
Okay. Guys, we've got to wrap up soon for this panel before we move on to the next one. Can we take is there any questions in the audience for any of our panelists? Do we have? If not, I can ask a couple more questions. We have one, James? Just shout. I don't think there's none. So the question, I'll just repeat the question in case anyone couldn't hear. So it's about the state of, I think Drew or Obi, someone touched on it earlier about insurance. Again, it's something that's been spoken about for some time. Early market, there's a demand for it now, it's insuring. Where are we at with that?
Yeah, so insurance is something that's started to come in now. For example, we work with Aon. We have financial crime policy cover. and it's one of the most extensive on the market. But again, it's very new, so it comes at a high premium. Aon actually were very fast moving into the space. They received many requests from different funds and different corporates in this sector trying to get insurance on the crypto assets. And quite rightly, they put their hands up and said, we don't understand this space, we don't know the threat model, we don't understand the risks and how to price it. So we work with them very closely, and we have done for a while, to do various workshops and educational sessions to give them the knowledge to start writing out policies. So you are seeing things like, financial crime policy, which is what you'd get as a bank. And size-wise, I'm not going to go down there, unfortunately, sorry. The other part of it as well is on specie insurance. So again, when you're looking to the space, you need to be mindful of which of the two you're getting. Specie is more insurance of an object or a device, as an example. Financial crime is a lot more comprehensive.
So we've been insured since we launched in 2012. So we have the longest and the largest insurance policy that I'm aware of. We do it through Lloyd's of London. We have insurance both for our exchange, which is cold insurance, as well as cold storage insurance, as well as hot wallets insurance, and then we have a separate policy for our qualified custodian as well. We recently disclosed the sizes because we're trying to be more transparent with the industry. So we have just north of $500 million of insurance. Anything above that, our balance sheet steps in, and we kind of fill that gap. I think that there's a lot of talk about insurance with crypto assets, but in the traditional world, you would never go into Northern Trust and say, no, what's your insurance policy? So it is pretty interesting, but I think that in terms of the way it's evolving, we have to be cognizant. Like, we've been an early participant in the insurance market. There's roughly, by our estimates, call it $3.5 billion globally for crypto insurance, with a market cap that today was around $168 billion. So that kind of gives you the delta on what is not insured. And there's various kind of measures you can take to kind of make that insurance stretch farther than what it actually goes.
So we've looked at insurance for various insurance policies for over 6 years, and we've had them on our table ready to take, but none of the insurance policies until very recently, some of the ones that Volt mentions, for example, were actually really covering what you needed to cover. So we rejected any insurance policy beyond a year or two older than now. We have now recently, we have some announcements in the insurance space. But again, we're part of the community, so we are not only having insurance for ourselves, but we are interested in investigating insurance policies for individuals if they wish to insure their own personal holdings of cryptocurrency personally as well. So we are doing these two things in parallel, and we'll very soon have some announcements in both those areas.
Cool. Do we have any more questions from the audience? No one out there? Okay, we do need to wrap this panel up shortly. I'll do the question that normally pops up on this panel, and this is an investment advice at all, but you all get to buy one cryptocurrency or token today and have to hold it for 5 years. Which one would it be, each of you?
I mean, there's only one choice. Well, my first choice would be Bitcoin, my second would be Bitcoin, and my third would be Bitcoin.
Oh, there we go. You're allowed 3 choices.
Bitcoin.
I'll go something a bit more small cap. I'll say Cosmos Atoms.
No comment.
I don't think I can comment either.
You can't comment either? Okay. That's fine. I've got to ask anyway. Guys, thank you very much, all of you. Hope everyone got something out of that conversation. We'll move on to the next panel shortly.